Hi everyone, this is Emily and I'm a digital transformation consultant at Hyperbots Inc. And I'm really pleased to have John on the call with me, who is the VP of FP&A at Extreme Reach. So thank you so much for joining us today, John. Really appreciate it.
No problem. Thank you for having me.
Of course. So, John, the topic that we'd be discussing today is the impact of GL coding on financial reporting and audit. And I'd really want to begin things by asking, why is GL coding so important for financial reporting and audit at all?
Yeah, geocoding is critical for your financial reporting and audit. Otherwise, it becomes very difficult to report correctly, and you have to go to the transaction level, and then it defeats the purpose of the GLs. So it's critical. It's also extremely hard to audit something when it's mixed, and you're also generally not compliant if you're not coding things properly in the financials. So it is critical both from a reporting and audit perspective, and also for management to make proper decisions and everything to make sure that selling and marketing expenses is selling and marketing expenses and that it's easily tracked and you know who the owner is and you know what it is.
Got it. So let me ask you this. How does a well-structured GL coding scheme enhance decision making for the management?
If you well structure the GL coding, the decision making, you have to align your GL coding to not only align from an accounting and GAAP standpoint, but also to make sure that you can make proper decisions on pricing or on do proper ratios and things like that based on how you break your financials out. So GL coding, it allows you to get a segment reporting and figure out how profitable certain areas, how profitable a product is or service line or those types of things. If you don't break it out and you don't have the right granularity, it gets really complicated to figure out the important information to make decisions in the business.
Got it. So, just out of curiosity, John, can you provide like an example of how GL coding affects compliance with regulatory and tax requirements?
Yeah, so geocoding, I touched on it a little bit, but the if your transactions aren't accurately classified with if there's a gap, it can affect your tax calculations, anything from sales tax to VAT to corporate income tax, and how you can end up overpaying. You can end up with audit issues on the tax side as well. So it's critical that you are following the proper accounting and you have the right GL coding up so you can have the right impact to the various jurisdictions, and it reduces any penalties for non-compliance. If VAT is consistently coded under a specific GL account, it becomes much easier to prepare accurate VAT returns and comply with the local tax authorities.
So, what are some of the common mistakes that organizations make while, with their GL coding schemes, and how can they be avoided?
Yeah, the biggest mistake is overcomplication of the GL, where you start making GL codes for everything. Then there's also the opposite side of where you don't break things out at all and it's all lump amounts and things like that, which gets very hard to make decisions off of. So it is critical that you figure out that balance between detail and summary level data. So you can also make sure that you have proper hierarchies and things set up so you can go a little bit more granular if you need to, and then have a proper roll up as well. There's also a lot of tools out there now that help with different ways of reporting from a management perspective that can help this as well.
Understood. Also, John, how can GL coding scheme be designed to provide real time or near real time financial reporting?
Yeah, so if your geocoding's proper, then you can have, as transactions are happening in your GL or ERP or even CRM and things, you can see that data at the right levels, and see where you're at. So it gets easy to see where you might end up to from a financial standpoint. And if you need to make decisions to either put on the gas on sales, or you might need to relieve your operations folks and things if you're in a service business, or you might need to ramp up production if you're seeing various things from the CRM. So it's very critical that you align all the not only the geocoding, but the geocoding with the right levels of data between your ERP, CRM, and your procurement system. So you can do that from a financial analysis and get it live versus waiting for like a month close to actually know your data.
And John, would you provide an example of how GL coding alignment with business strategy can improve performance monitoring?
Yeah, so if a company aligns its GL coding schema with its key performance indicators, it can monitor and optimize these metrics more effectively. And it goes to the last question too, that you can see it real time. So you can make decisions real time on how to affect and move those KPIs. So for instance, a SaaS company might use specific GL codes for different components of customer acquisition costs and customer retention costs expenses, and that can give you insights right away on how you're performing against your retention and your acquisition goals and targets for the year. So by doing so, the company can generate the financial reports that focus on your customer acquisition costs. It's a critical metric for growth to see how much it is acquiring, and you might want to change your pricing even because of how much it takes from a customer acquisition, or you might see the value in things and that you can move faster, and maybe you can ramp up your actual acquisitions because the pipeline's moving a little bit faster and things like that. So it is critical that you align that so you can have those decisions versus just gut feel.
Makes sense. So, a little bit about the audit process, John. How does a well structured GL coding scheme simplify the audit process?
Yeah, a well-structured GL coding scheme, it simplifies the audit process by providing a clear and consistent trail of the transactions. This clarity allows auditors to quickly trace the entries, verify their accuracy, and ensure that you're compliant with the accounting standards. It can get really messy pretty quick, and I'll go into an example in a minute, but it's if you're having to reclass and move things after they already hit the GL, it gets hard to trace and figure out where things actually, where the expenses and the liability, everything actually hit. So, for example, if an organization uses a separate GL code for office supplies dash HQ and office supplies dash regional officers, auditors can efficiently sample and analyze expenses related to those different locations. So that's one way to do it from a segmentation in GL for to see discrepancies or unusual spending patterns. In that case, too, you need to be careful though, and I'll say it from an example, is if you're breaking it out between headquarters and regional offices, it might be easier to have it as another dimension too between your actual regions if that's a dimension in your ERP that's available.
Got it. And just to wind things up, one last question, John. So, what would be your key recommendations for organizations looking to optimize their GL coding scheme?
Yeah, the key recommendations first, design a hierarchical structure. So make sure that you go down to the detailed level, but you're able to summarize too, and that you're using multidimensional analysis. So you're not mixing it up and putting it all in your GL codes, but you're using multi-dimension so you can basically drag and drop like a pivot table, like if you need different companies that you have in your roll-ups, cost centers, departments, product lines, you want those schemas to be specific for those things so you don't mix them up and get too complicated. You also want to balance the granularity and simplicity. So provide enough detail to get the insights without having to go in and do analysis at like a transaction level. Align with the business strategy. So this is important because business strategies do change. So it's important that you understand what the business is going to do and what they're going to do from a strategic standpoint. So you're set up for success to actually measure the business going forward too, and not just a prior and old way of looking at it that's not in line with how the business is selling today. Integrate with the other systems. Don't have it a total separate. If you do have it separate and you're not integrated with the other things, you're not going to have that real time reporting. And then you want a regular review to make sure that you are coding and that your schema makes sense for the current regulatory and organizational structures that you have.
Got it. Thank you so much, John, for sharing your insights on the critical role of GL coding in financial reporting, auditing, and decision making. Your examples and recommendations, I think, will certainly help organizations better structure their GL coding schemes to achieve more actionable financial reports. So, thank you so much for being here.